In this video, I'm going to show you how you can make double-digit returns each week, trading just one pair, and destroying the stigma in the community of needing to trade multiple pairs or needing to trade every day. When you stick to this high probability approach I'm going to display throughout the video, watch how your outlook on the marketplace will change, and in doing so, become one step closer to consistent profitability. So I advise you to watch till the end of the video and take notes, as well as follow me on Instagram at Arkhamtrades if you haven't already, and leave a comment below saying you've done so. Thank you. I'm going to break down this week of April and all the trades that I took, which I did share on my Instagram as well as called live inside of my private mentorship, which netted me a little over 10%. These weeks are common for me now in my trading journey because I've simplified my trading to focus on the highest probability opportunities inside the marketplace. This approach I speak of is simply identifying your bias inside the marketplace, which we will teach very simply in this video, then anticipating a breaker structure or confirmation, which we'll also speak about, and then entering either a fair value gap, breaker block, or order block during a kill zone. That's it. Now let's get into our first trade. So coming into the marketplace, we can identify this 1 hour bearish order block. So how I'd approach this from a bias standpoint is I'd anticipate price to come into this 1 hour order block, give a lower time frame confirmation or a lower time frame breaker structure. And if we can see that breaker structure followed by a pullback, I'll then take a short inside of that lower time frame order block or lower time frame inefficiency, whichever one it gives, to then take that short for that continuation to the downside, using that higher time frame order block as a area of resistance, then taking that lower time frame break followed by that retracement as a entry for my trade idea. We can first identify this low as well as this low down here as areas of targeting that the marketplace can reach down into. So let's see what happens. The market reaches up into that bearish order block. Then we get that breaker structure to the downside, leaving that 1 hour bearish order block. I'm going to mark out this bearish lower time frame order block here. And if we can see the marketplace reach back up into this lower time frame order block level, I want to then take a short. Stop loss just above these highs, targeting back below this low for a 3 to 1 hour. Let's see what happens. Price then comes up, tags us in, and the bullseye coming down to our final target. Very clean, very simple, identifying that higher time frame bearish order block, then coming down to a lower time frame, anticipating that breaker structure and confirmation for that lower time frame entry. So coming into the next trade idea here, we can identify this long wick 50% as well as the high of that long wick right here. Price reached up into that 50% level and then quickly left it. That's a very good signature we want to look for. And we have all these inefficiencies down here that we could potentially see the marketplace want to reach down into. So if we can get some type of breaker structure to the downside, right, following this retracement, this then would be that bearish breaker. So we're anticipating this being a bearish breaker. And if we can get a retracement inside this bearish breaker, we can then anticipate that short coming back lower into this fair value gap or this fair value gap. So let's see what happens. We get that breaker structure to the downside, just like so. We then create this bearish fair value gap inside this bearish breaker. If we can come back into this bearish fair value gap, stop loss just above the fair value gap, just like so. I want to take a 2 to 1 hour trade here, just back inside of this bullish fair value gap down here for a quick 2 to 1 hour trade. Price comes back into that bearish fair value gap as well as bearish breaker. A very, very good setup here. This is called the unicorn setup breaker, as well as a fair value gap inside of that breaker. Very clean. And then we reach down into our full target here for a 2 to 1 hour. Keeping it very simple, aiming for a 2 to 1 or sometimes 3 to 1 hour. Keeping it very mechanical and simple because it's repeatable. You want to create a model, a strategy that's very repeatable that you can do every single day. This is how you can get returns like these. Coming into the next trade idea here, we can clearly identify that we have been pushing higher and higher prices, breaking structure to the upside. And then we reached up into these highs, creating equal highs. As you guys know, equal highs inside the marketplace are strong areas of liquidity that the marketplace does eventually want to take out. So we have equal highs up here. So my bias is I want to see us reach higher up into these equal highs. We can see that we have given a retracement back into this bullish order block. I want to see if we can break higher from this bullish order block, right, leaving this bullish order block level. That will then be my confirmation. And if we can get some type of lower time frame PD array entry, I want to take longs back up into these equal highs as an area of target. We can clearly see that price has created this bullish fair value gap here. If we can get some type of pullback inside this bullish trade gap, I want to then take longs, aiming for these equal highs. So we created our bias. We've seen this breaker structure to the upside. Now we have that lower time frame entry into that higher time frame bias, which is these equal highs or that liquidity pool. So I'm gonna put my limit order here, stop loss just below that order block right here, aiming for a 2 to 1 R back above these highs. Let's see what happens. Price comes down, taps us in, and immediately runs up into those equal highs just like so. Quick 15-minute trade, didn't have to do much. Very, very simple. Coming to our next trade here, we can clearly identify this buy side liquidity, as well as we have been making higher and higher prices inside of the marketplace. So our bias is we want to reach up into this buy side liquidity pool as an area of targeting. And if we can find support inside of these lower time frame order block levels, I want to then take longs into that higher time frame target. So let's see what happens. We reach down into that buy side liquidity pool, very solid. Let me see if we can get some type of break here. We do, leaving this lower time frame order block entry right here. If we can come back down into this lower time frame order block just like so, I want to take longs, stop loss just below this order block body, aiming back above this buy side liquidity. And just like so, price comes down, taps into our order block level, reaching up into that buy side liquidity pool. Very, very simple. Coming into our marketplace, we do see this 1 hour bearish order block. We have been making higher prices all throughout London session. So coming into the marketplace, I was a little aggressive, and I put my limit order at the 50% of this 1 hour bearish order block. Stop loss just above that bearish order block body, and I was aiming for about a 2 to 1 R just like so. This was a trade idea, was very aggressive. I was anticipating price to find rejection at this 1 hour bearish order block. I didn't necessarily wait for the confirmation because I understood we've been making higher and higher prices, and price tends to respect these 1 hour bearish order block levels. So I'm going to take the aggressive trade here with the opportunity of scaling in. So let's see what happens. Price reaches up into that 50% level of that 1 hour bearish order block. If we can get some type of break here, I want to then scale into my trade. We come back up here, stop hunting this high here, just like so, following this down close candle lower. So now, seeing this stop hunt, and then we get this down close candle like I wanted to see, I'm going to scale into my trade here. Stop loss just above that high, aiming back below down here for a 1 to 1. So the original trade was a 2 to 1 R, and now this trade is a 1 to 1 R, making this a 3 to 1 R trade overall because I scaled into my position. So adding to my winners is very good because then this allows me to make more on my wins after I gain confirmation that I'm on sides and the trade is going in my favor. So let's see what happens here. Price eventually reaches down into our targeting here, making over a 3 to 1 R on this trade, ending this week off for over 10% with a 100% win rate. All these trades were shared live on my Instagram, as well as I do trade live with my students every single morning. I'm Arkham. Be safe. I have released my private mentorship where I give daily lessons on technical analysis, fundamental analysis, psychology, risk management, as well as live trading and much more for your trading success. If that's something you guys wish to check out and want even more content and gems from me, not shared anywhere else, it will be the first link in the description or the first link in my Instagram bio if you wish to follow me on there as well, at Arkhamtrades. Thank you for watching.